Yes, sir. So till now we understood that there should be a capital asset and that capital asset should be transferred. Because of the transfer, sir, profits or gains will come. And this profits or gains will be taxable under the head capital gain. Correcta? Sir, நம்ம இப்போ section 47 பத்தி பேச போறோம். That is transaction not regarded as transfer. Transaction not regarded as, sir, even though if you are having a capital asset, you have transferred the capital asset from one person to another person. What Income Tax Act is saying that it will not be regarded as transfer. It will not be regarded as, sir, if it is not a transfer, capital gain will not come, right, sir? So section 47, sir, you have to understand conceptually that we have classified into two parts, part number 1 and part number 2. Part number 1, 47 clause 1, which is applicable to HUF, which is applicable to what 47 clause 1 is saying that in this transaction, two parties are there. One is HUF and other is the members. Sir, HUF is having a capital asset. HUF is having a, sir, assume I am the HUF, you are the member. I am giving that capital asset to you. So transfer of capital asset by whom? HUF. To whom? Members. Either at the time of total or partial partition. We are going to split the HUF. At that time, whatever capital asset I am having, I am giving to you. So transfer of capital asset by an HUF to its members will not be regarded as transfer. That means in the hands of HUF, capital gain will not come. That's it. My role, dandanaka, done. Coming to your place, you are the member. Have you received the capital asset? If you receive the capital asset, there is no question of capital gain. But there is a question of IFOS. At the time of receipt of capital asset, IFOS will not come because under section 56 subsection 2 clause 10, we are having a proviso. Under that proviso, we are having non-applicability. That's saying that certain 47 transaction, you are not liable to pay the IFOS. So because of proviso to 56 subsection 2 clause 10. Now capital asset is with me or capital asset is with you? With you. That means if you are selling that capital asset in future, dash gain will come. Capital gain will come. How to compute that capital gain is what the computation. So in future, if you are transferring the capital asset, dash gain attracted, capital gain attracted. At that time, sir, you have to calculate the capital gain like this. What value of consideration will be the real selling price for which you sold the capital asset, right? Less, if there is any expense for transfer, you have to minus it. You will get the net consideration. Can I proceed? You have to reduce the cost of acquisition. You tell me, have you paid anything to me at the time of receiving capital asset? No, because transaction is not regarded as transfer. So whatever cost of acquisition of the previous owner, who is the previous owner? HUF, can be enjoyed by yourself. That's what cost of acquisition is, cost of acquisition of the previous owner as per 49 subsection 1. Sir, from whom the period of holding will be counted? Period of holding will be counted from the HUF. That means this is what the transaction has happened. There is a capital asset. Sir, this is HUF and this is member. This capital asset has been purchased by the HUF. At the time of total or partial partition, this capital asset has been transferred to the member. And now the capital asset is with the member. In future, the member is selling the capital asset for the purpose of determining the period of holding. You can count the period of holding from the what owner? Previous owner. From this date till this date, you can take the period of holding. Are you really with me? So period of holding should also be from the previous owner as per 242A. Now benefit of indexation. Sir, there is a contradiction in the Income Tax Act. Income Tax Act is saying that for the indexed cost of acquisition divided by CII of the year of first held by the assessee. Here the assessee is the member. The asset is first held by the assessees in this year. Are you able to appreciate? So if you take the denominator only in this year, then my dear lovable students, indexed cost of acquisition reduces, then capital gain increases. So there is a person called as Manjula Jesha. He asking to a Bombay High Court that you are saying that transaction is not regarded as transfer, That is why you are allowing me to enjoy the cost as cost to the previous owner. That is why you are allowing me to enjoy the period of holding from the, then the benefit of indexation should also be from the previous owner and not from the current owner. So the benefit of indexation can be enjoyed from this year and not from this year is what the Manjula Jesha benefit of indexation is also from the previous owner as per Manjula Jesha. Comfortable? So one line summary of the entire discussion is as per 47 clause 1, transfer of capital asset by a HUF to its members will not be regarded as transfer in the hands of the HUF. That's its story over. But we are analyzing the members. Member actually first they have to get the capital asset. At the time of receipt of capital asset, no IFOS because of proviso to 56 subsection 2 clause 10. Lifelong, if they are holding the capital asset, no capital gain. But if you are transferring the capital asset, dash will come, capital gain will come. How you will calculate the capital gain? Full value of consideration is the actual selling price subject to deemed consideration. If there is any expense for transfer, you can reduce it. You will get the answer as net consideration. Am I right? Sir, cost of acquisition is cost to the period of holding should be reckoned from the benefit of indexation as per Income Tax Act actually from the current owner, but as per Manju can be taken from the. That's it with regard to 47 clause 1. I'm moving into the next clause. 47 clause 3, donor to donee. Donor to amendment area, expected area for examination. Sir, in the hands of transferor, that is donor. Transfer of capital asset by way of gift or will or inheritance by an individual or HUF will not be regarded as. For example, my dear lovable students, I am having a capital asset. Assume this is a capital asset. I am transferring this capital asset to you either by way of gift or by way of will or by way of inheritance will not be regarded as transfer in the hands of the transferor, and that is dash or dash, individual or HUF. Earlier by any person, gift or will or inheritance was exempted, but only now individual or HUF is exempted. Are you really with me? So there are two parties are there. Number one, donor and donee. So the person who are giving the gift is called as donor. I am having capital asset. Sir, transfer of capital asset by way of what or what or what? Gift or will or what you should check. Who's the person who are giving the gift? Is he an individual or HUF? Yes, then will not be regarded as transfer. Is it other than individual or HUF? Sir, it will be regarded as transfer. Because now restriction has been introduced for 47 clause 3. Comfortable? Now you are the donee. You are the what? I am discussing from the angle of the donee. Come on. Are you receiving capital asset? Check. Have you covered under the proviso to 56 subsection 2 clause 10? That means have you received the capital asset from a relative on occasion of marriage or will or inheritance? Hello sir. Or death of the donor or registered charitable trust under section 12AB or 1023 C series organization or private trust or such other as may be prescribed section 47. Hello sir. Sir, on occasion of your marriage, I have given the capital asset. Then you fall under proviso. Once you fall under proviso to 56 subsection 2 class 10, then 56 subsection 2 class 10 will not be. Then at the time of receipt of capital asset, no NOS. Because of proviso to 56 subsection 2 class 10. If that capital asset, if you are holding for lifelong, then there is no capital gain. Because you just received the capital asset, not transferred the capital asset. Comfortable? But my dear lovable students, assume you are selling in future. At the time of receipt, have you suffered IFOS? No, sir. Because you fall in proviso. If you fall in proviso, section will not be applicable. Comfortable? Then at the time of future sale, full value of consideration will be actual selling price. Expense for transfer, if any, can be reduced. Then the cost of acquisition is actually 0. Then you can take the cost of acquisition as cost to the as per 49 subsection 1. Period of holding should also be taken from the previous owner as per section 242A. And benefit of indexation can also be enjoyed from the previous owner as per Manjula Jesha. Comfortable? Assume the second scenario. You have not covered under the proviso to 56 subsection 2 clause 10. You really take myself, ANM. You are my students. Hello, sir. We both are relative as per Income Tax Act. No, sir. That's what I specifically asked. Immediately, some emotional student will say that, yes, sir. Sir, as per Income Tax Act, no, sir. Are you going to get married? No, sir. It's not your on occasion of marriage. Are you really with me? Yes, sir. Sir, I am not going to write will or inheritance. I am not a registered charitable trust. I am not 1023C series organization. That means you have not fall under the proviso, the circumstance which are covered under proviso 56 subsection 2 class 10. That means you will fall under IFOS. You will fall under which section? 56 subsection 2 class 10, which is applicable to all SSC. All SSC may receive gift either by way of cash or by way of immovable property or by way of other than immovable property. If it is by way of cash, if the aggregate amount of cash received exceeds 50,000, then the entire amount is taxable. Immovable property can be received either without consideration or inadequate consideration. Other than immovable property can be received either without consideration or inadequate consideration. Able to connect it. Since you have not fall under proviso, you will fall under IFOS 56 subsection 2 class. Then at the time of receipt of capital asset, what will get attracted? That means I have not paid any capital gain, but you paid IFOS, my dear lovable students. That means chain break. That means chain. That means, sir, I were having a capital asset, right? I gifted that capital asset. As per 47 clause 3, there is no capital gain in my hands. But since you have not fall under the proviso, you fall under what OS? IFOS. Now the capital asset is with you. In future, if you sell the capital asset, dash gain attracted. Then, for you, my dear lovable students, you can't enjoy my cost of acquisition. You can't enjoy my period of holding. You can't enjoy my benefit of indexation. In order to enjoy that, chain should not break. Here, what has been breaked? Hence, my dear lovable students, sir, when you sell in future, dash gain attracted. Cost of acquisition, have you suffered the stamp duty value under IFOS? That can be taken as a cost of acquisition. Why are you taking the cost of acquisition of the previous owner? Because you itself paid tax under NOS, IFOS. NOS, IFOS. Are you really with me? That means 49 subsection 1 will not be applicable. What is 49 subsection 1? Cost of acquisition is cost to the previous owner because he is the first person. That is why 49 subsection 1. When I give this capital asset, have you fall under proviso? No, sir. No, sir. That means you fall under what OS? And you suffered the stamp duty value of the property under IFOS. Am I right? That means you paid tax under the head IFOS. Yes, that's why 49 subsection 4. 4 words are there. Are you really with me? If it is previous owner, first person, 49 subsection 1. IFOS. Yes, 49 subsection 4. Sir, period of holding, this period will not be considered. Period of holding should be from the receipt of capital asset under 242A. This period only we will consider. Manju will not be applicable. Benefit of indexation will be first held by the assessee. You are the assessee. Can I proceed? That's it with regard to, sir, 47 subsection, sir, clause 3. Can I proceed, sir? 2 clauses we have done. 47 clause 1, HUF to the members. 47 clause 3, donor-donee relationship. For donor, always no capital gain. Whether you fall under proviso, not fall under proviso, is not my problem. But donee, he may fall under proviso. If he fall under proviso, no IFOS. If he don't fall under proviso, there is IFOS. If IFOS is there, in future, sir, check will not be applicable. That is previous owner, previous owner, previous owner. That is what check will not be. Coming to a transaction between holding company to subsidiary company. Very simple, man. There are 2 parties in this transaction. One is holding company and other is subsidiary company. My dear lovable students, if you are transferring capital asset by a holding company to the subsidiary company, will not be regarded as what? Transfer. For example, I am the holding company. You are my subsidiary company. I am having a capital asset. I am selling or transferring the capital asset to you. No need to pay capital gain by the holding company. Are you really with me? In the hands of the subsidiary company, in your hands, have you received any capital asset? Yes, sir. At the time of receipt of capital asset, no what OS? That is because of proviso to 56 subsection 2 clause 10. Are you all really with me? Now the capital asset is with the subsidiary company. They may sell that in future. So this is the timeline, man. Sir, this is with regard to holding company. They transfer to the subsidiary company. In future, they sold the capital asset. Am I right? So when you calculate the capital gain for the subsidiary company, full value of consideration is the actual full value of consideration. Less expense, whatever you can reduce it. You will get the net consideration less what of acquisition is cost to the what owner? Who is the previous owner? That's what cost of acquisition is, cost to the previous owner. Period of indexation, not only this period, but also this period. That is period of holding from the what owner? Previous owner. As the chain break, the chain continuing. Then Manju will be applicable. Benefit of indexation will not from this year. Benefit of indexation will be from this year. Clarity? That's it, my dear lovable students. But in order to enjoy 47 clause 4, you tell me, 47 clause 4 will be enjoyed by holding company or subsidiary company? Holding company. First of all, subsidiary company should be an Indian company. Subsidiary company should be I am the holding company. I am having capital asset. I will be transferring the capital asset to the subsidiary company. If the subsidiary company is a foreign company, asset will go out of India. If subsidiary company is an Indian company, inside India only the asset will sutti vandige. Correct? So, asset should not go out of India. Point number 1. And subsidiary company should be wholly owned subsidiary company. Subsidiary company should be, that means 100% share capital of the subsidiary company should be held by the holding company. Hello, sir. Let me ask you a question. Sir, do you have sharta? Do you have panta? In pant pocket, you are having 100 rupees. Take the 100 rupees from the pant pocket. Keep in the shirt pocket. What is the increase in cash balance? Zero increase. So if 100% share capital is held by the holding company, sir, there is no difference between holding company and the subsidiary company. So from pant pocket, if I transferring money to the shirt pocket, why are you asking me to pay capital gain? That's why 47 clause 4 is saying that transfer of capital asset by a holding company to the subsidiary company will not be regarded as transfer. Oh, abdi varingla. Yes, sir. And capital asset should be transferred as what asset? Capital asset should not be transferred as stock in trade because provisions of 45 subsection 2 will be applicable. Conversion of capital asset into what in trade? That's it with regard to 47 clause 4. Coming to 47 clause by A, you are the subsidiary company. I am the holding company. Every time why I alone have to transfer the capital asset, you also having a very good capital asset. I said that I love you, the capital asset. Transfer of, so there are two parties are there. One is subsidiary company and the what company? Holding company. Transfer of capital asset by a subsidiary company to the holding company will not be regarded as. So in your hand, don't pay capital gain. Why? Because, sir, you and me are one and the same. Because 100% of the share capital of the subsidiary company is held by the holding company. Pan pocket to shirt pocket. Are you all really with me? Now, as a subsidiary company, holding company, whether I will receive the capital asset or transfer the capital asset. Receive the capital asset. No NOS, IFOS. Because of proviso 56 subsection 2 clause 10. Now, the capital asset is with me. If I am holding this for lifelong, no capital gain. But if I am transferring in future, dash gain will come. At that time, full value of consideration is the actual selling price subject to demerger consideration. If you are having any expense for transfer, you can reduce it. You will get the net consideration. Then cost of acquisition. I have not paid anything. Sir, cost of acquisition is cost of acquisition to the, as per 49 subsection. Period of holding will be reckoned from the previous owner as per section 242. Benefit of indexation will be from the previous owner as per Manjula. In order to enjoy 47 clause 5 by the subsidiary company should satisfy 3 conditions. Number 1, holding company should be I should be in India. Otherwise, asset will go out of India. That is not allowed by the Income Tax Act. Holding company should hold 100% share capital of the subsidiary company. I should hold 100% of your share capital. That means you and me are one and the. And capital asset should be transferred as, should not be transferred as stock in trade. Comfortable? Are you all really with me? But for these two clauses alone, who are these two clauses, man? 47 clause 4 And 47 clause 5, there is a futuristic condition. There is a, either the holding company will transfer the capital asset to the subsidiary company, or subsidiary company will transfer the capital asset to the holding company. The recipient, the recipient may be either holding company or should not convert into stock in trade for a period of next year how many years? That means for a minimum period of 8 years, the recipient should hold it as dash asset itself. Should not be converted into. And subsidiary company should be wholly owned subsidiary for a period of how many years? 8 years. I should not sell the share capital of the subsidiary company for the next 8 years. Neeyu nanu onnuda. Are you all really with me? That's it. 47 clause 5 also done. Done. Coming to 47 clause 6, amalgamating company to the amalgamated company. Hello sir. Have you heard about amalgamation AS 14? Yes sir. Sir, AS 14 is what? The amalgamation. Two companies will be there in amalgamation. Correct? One is amalgamating company and amalgamated company. Right? This amalgamating company is the company who are going to die. Ennappa. And amalgamated company is the company who are going to live. Ennappa. That's why this company is going to die. That's why amalgamating money adikidhu pathiya. Sethupo poran. Right sir? So, how the tax treatment should be discussed, man. No man, certain students will be having doubt who is amalgamating, what is amalgamated. Come on. Even I was having when I'm studying. Come on. So, amalgamation of Indian company in the hands of amalgamating company, in the hands of amalgamated company, and in the hands of what holder? Shareholder. Come on, man. Sir, at the time of amalgamation, all the assets and liabilities of the amalgamating company should become the assets and liabilities of the amalgamated company. Yes, sir. So, all the assets of which company will be transferred to the. Actually, capital gain should come to me. What Income Tax Act is saying that transfer of capital asset by amalgamating company to the amalgamated company at the time of amalgamation will not be regarded as a thing. You happily die, don't pay capital gain. Hello. But in order to enjoy this 47 clause 6, 3 conditions should be satisfied. Amalgamated should be an. Then only asset will be within India. And all the assets and liabilities of the amalgamating company should become the assets and liabilities of the amalgamated company. Comfortable. And at least 75% of the shareholder of which company should become shareholder of the amalgamated company. Hello sir. Now in the hands of amalgamated company, have they received capital asset or transferred capital asset? At the time of receipt of capital asset, no IFOS because of proviso 56 subsection 2 class 10. Sir, if they holded that capital asset for lifelong as a treasure, then capital gain will not come. But Timur Budichi, in case in future, if they transfer, na dash gain will come. At that time, chak will be applicable. Cost of acquisition will be cost of acquisition from the period of holding should be from the previous owner as per 242A, and benefit of indexation should also be from the previous owner as per Manjula. Now I am going to talk about the shareholder. Two companies was there. Sir, you were a shareholder of the amalgamating company. What happened to that company? Died. That means all the shares you are having become valueless. Correct? Now it is zero value. Correct? That means if you are keeping still the shares of the amalgamating company, there is no value for that. Hello, sir. Put it on dustbin. Hello. You have extinguished the rights. You have relinquished the rights. The shares of the amalgamating company. To compensate that, you will give the shares of the amalgamated company. Correct? Actually, this is a transfer under section 2 subsection 47. But what the Income Tax Act is saying that amalgamating, we don't collect any tax. Amalgamated, we don't collect any IFOS. Even shareholder, you also enjoy. Deva, Ichko. You give the shares of Ting company, get the shares of that company, We will not ask any capital gain as per section 47 clause 7. Comfortable? Sir, no capital gain. So will you ask any IFOS? No IFOS also because of proviso 56 subsection 2 clause 10. Comfortable? If the shares of the amalgamated company is holded by the shareholder for lifelong, there is no capital gain at all. But if he is selling that in future, dash gain attracted. With cost of acquisition is cost to the previous owner. Sollade. Cost of acquisition is the shares of the amalgamating company. You have purchased really shares of amalgamating company, yeah? By paying some amount, that amount you take it as cost of acquisition. You really purchase the shares of amalgamating company, yeah? From that date, you can take the period of holding. Sir, you have really purchased the shares of amalgamating company, yeah? Sir, from that year, you can enjoy the benefit of indexation. Comfortable? This is what the part 1 of section 47. Can I move into the part number 2, my dear lovable students? Sir, there is a big company. You know, the big company's name is ANM. Hello, sir. Which were having 3 units, my dear lovable students. Unit A, Unit N and Unit M. Unit N is, sir, second unit. They are feeling that they are not able to see the unit M. They want to demerge unit M. They want to demerge unit M. What, man? Demerge. What M? Unit M. And they want to start a separate company called as M Limited. So, all the assets and liabilities of unit M has been transferred to M Limited. Has been transferred to. So, since all the assets and liabilities of the M has been transferred to the M Limited, actually capital gain should attract in the hands of ANM. Correct? What 47 clause 6b is saying that transfer of capital asset by a demerged company. Sir, who is the demerged company? ANM. To the resulting company, new company. Who is the new company? M Limited will not be regarded as transfer. So, Income Tax Act is saying that you happily demerge. You happily demerge. You convert the ANM Limited into M Limited. We don't have any problem. At that time, if you want, you can transfer the capital asset from ANM Limited to M Limited. We will not ask what gain? Capital gain. It is, sir, will not be regarded as transfer in the hands of the demerged company. As per 47 clause 6b. 6 is amalgamation. Are you really with me? 6b. B. Because ANM Limited was a big company. Are you really with me? Sir, only a big company can demerge. That's why 6b, demerged company to the resulting company. Correct? Now, who is the resulting company? M Limited. They will receive the capital asset or transfer the capital asset. Receive the capital asset. Alright, sir? At the time of receipt of capital asset, no NOS. Because of proviso 56 subsection 2 clause 10. If M Limited is holded the capital asset like a treasure in their lifelong, no capital gain will come. But in future, if they transfer the capital asset, dash will come. At that time, capital gain attracted. Then chak will be applicable. Online students, chak means previous owner. Because last time when I put the video, some students were asking that what is the meaning of chak. So cost of acquisition is cost of acquisition of the previous owner as per 49 subsection 1. Period of holding should be reckoned from the previous owner as per 242A. Benefit of indexation should be from the previous owner as per Manjula Chesha. This is the most important part in the demerger. Earlier you were holding the shares of ANM Limited, right, sir? They have demerged to become M Limited. Now ANM Limited has become AN Limited. Are you really with me? And new company called as M Limited. So this AN Limited is called as demerged company and M Limited is called as resulting company. Are you really with me? If you holded the shares of ANM Limited before demerger, that shares will be having some value. Correct? Now M get out. The company is only AN Limited. So the value of the ANM Limited share would have reduced. It's not like amalgamation. It will not become zero because amalgamating died. But ANM not died. Now they are only having A and N. Correct? So for the reduction of the value, they will get shares of what limited? M Limited. M Limited. So as a shareholder, originally they were having only shares of ANM Limited. Put it on dustbin. They will be having shares of AN Limited. Now the share value of AN Limited would have reduced because of what merger? Demerger. In order to compensate that, shareholder will get shares of what limited? M Limited. That is a what company? Resulting company. So as a shareholder, if it is amalgamation, they will be having shares of amalgamating, put it on dustbin, get the shares of taddi, that's it, game over. But in a demerger, already they were having shares of ANM, put it on dustbin, get the shares of AN Limited and get the shares of M Limited. So both capital asset will be there in your hand. If you sell shares of AN Limited, capital gain will come. If you sell the shares of M Limited, capital gain will come. Comfortable? So what act is saying that as a shareholder, you subscribed the shares of what limited? After that, they demerged. For that, what you can do? Then this ANM Limited has become the shares of AN Limited and you are having shares of M Limited. Correct? When you sell the shares of AN Limited, capital gain will come. When they sell the shares of M Limited, capital gain will come. Right? Have you really purchased shares of M Limited? No. You really purchased only ANM Limited. Assume the cost of acquisition of ANM Limited you purchased is 10 lakh. You purchased this. At that time, the net worth of ANM was 10 crore. Hello, sir. And they have demerged one of the unit. Which unit? M. The net worth of the M was 4 crore. How much crore? So after demerger, out of 10 crore, 4 crore would have gone out. So 6 crore will be the net worth of AN. So now the 10 lakhs cost of acquisition has to be bifurcated between shares of AN and shares of M. Can I? What is the total cost of acquisition? 10 lakhs. Total cost of acquisition is 10 lakhs. Into what is the net worth of M Limited? 4 crores. What is the net worth of ANM before demerger? 10 crores. So 10 lakh into 4 crores divided by 10 crore comes to 4 lakhs is the cost of acquisition of the shares of M Limited. Are you really with me? What is the total cost of acquisition? 10 lakh. Out of that 4 lakh is the cost of acquisition of the resulting company. That means 10 lakh minus 4 lakh, 6 lakh is the cost of acquisition of the. Now, think from the angle of the shareholder, my dear lovable students. Shareholder already holding shares of ANM Limited. This has become less in value. To compensate that, they will get the shares of M Limited. At the time of receipt of shares of what company? Resulting company will not be regarded as transfer in the hands of the what holder. As per 47 clause 6D, 6 na amalgamation, 6B na big company, that is in the hands of the demerger company. Sir, 6D means D stands for demerger. Because of demerger only shareholder got the share. That's why as per 47 clause 6D, it will not be regarded as transfer. Sorry sir, there is no capital gain. Will IFOS attract? No. Because of proviso 56 subsection 2 N10 clause 10. Now, the shareholder is having shares of what company and what company? Resulting company and sir, at the time of future transfer, if we sell the shares of demerged company, capital gain will come. Sell the shares of resulting company, capital gain will come. Sir, dash gain will get attracted. cost of acquisition should be determined as per 49.2C and 49.2D. That only I explained as 49.2C and 49.2D. Look at here. What is 49.2C in case of what merger? Cost of acquisition in the dash company, resulting company, which is A into B by C. What is A? Cost of acquisition of shares held in the what company? What was the total cost of acquisition? 10 lakh. Can I proceed? Net book value of the asset transfer in a demerger to the resulting company, how much crores they gave? 4 crore. C, net worth of the demerger company, that is aggregate of paid up share capital and general reserve, appear in the books of the demerger immediately before demerger. Before demerger, what was the total net worth? That means 10 lakh into 4 crore divided by 10 crore comes to 4 lakhs is the apportioned cost of acquisition of the shares of resulting company. You tell me, you really originally purchased which company share? ANM Limited, which is before demerger. How much you paid? 10 lakh. But now in your hand, ANM company share is there and resulting company share is there. Which is the new share? Resulting company. Have you purchased resulting company? No. Do you know the cost of acquisition of resulting company? No. So we have to see the cost of acquisition. That's why 49.2C. Please see resulting company, new company. Are you all really with me? Then my dear lovable students, sir, total 10 lakhs is the what of acquisition? Cost of acquisition. From that, I understand that 4 lakh is the cost of acquisition attributable to the resulting company. So 10 minus 4 is the cost of acquisition of the demerged company. Clarity. That's why 49.2D. D stands for demerged company. That's it. Are you all really with me? That's it with regard to the, sir, 49.2C and 2D. Sir, whether you sell the shares of demerged company share or resulting company share, period of holding should be reckoned from the date of acquisition of the what company? Demerged company. Benefit of indexation should be from the year of acquisition of the shares of the demerged company. Can I proceed? That's it, man. Now I'm moving into the next quick, sir, items. Capital asset. Sir, government securities. What security? For example, the bond or debentures will be issued by government. I am the government of India. Hello, sir. I am, sir, government of Tamil Nadu. I need fund. I am going to borrow money. I am going to what? I am going to issue, sir, bond. I am going to issue debenture. Transfer of what security? Carrying periodic payment of interest by non-resident to another non-resident. That means there is one non-resident situated outside India. He give money to the government. He is transferring that bond or debenture to another non-resident outside India. It will not be regarded as. That's what 47 clause 7B. B stands for borrowing. Government has borrowed money from one non-resident. He is having debenture or bond. That bond is transferring outside India to another non-resident, will not be regarded as transfer. Come on, man. Redemption of sovereign what bond? Gold bond. Don't buy physical gold. Sir, if you buy more physical gold, automatically the demand for the physical gold increases. That's what 47 clause 7C. C stands for chain. Don't put chain. Please invest in the paper gold. Are you really with me? If you invest in paper gold by an individual, there is a lock-in period of 8 years. After 8 years, if you redeem that gold bond, nothing will be taxable. Capital gain will be exempted. Are you really with me? Or if you are having lot of physical gold, you can convert this physical gold into paper form. Or when your daughter's marriage came, you can give this paper form and get back the physical gold. This is called as conversion of gold into electronic gold receipt. Or vice versa, will not be regarded as transfer as per 47 clause 7D. Are you all really with me? That's it. Then transfer of specified capital asset. If these asset, number one, any work of art, you have, sir, drawn some Mona Lisa painting or archaeological, scientific or your art collection, old collection, your old ICAI study material and all. Sir, any book, any manuscript, drawing, painting, photograph, print, if these capital assets are sold to government, no capital gain. Because consideration itself is paying by government. Are you going to pay capital gain to back to government itself? No. University, no capital gain. National Art Gallery, no capital gain. National Archives, no capital gain. Or any such other public museum or institution as may be notified by the government. If these capital asset transfer to these places will not be regarded as transfer. Are you really with me? Now I am going to talk about conversion. Sir, you really purchase bond, you really purchase debenture, you really purchase debenture stock, you really purchase deposit certificate in a company, but it has been converted into share of debenture of that company. It will not be regarded as transfer. So you really purchased original asset, but it has become new asset. Correct? At the time of receipt of the new asset, no IFOS because of proviso 56 subsection 2 clause 10. But at the time of future transfer, when you transfer the new asset, capital gain will come. Yes, sir. Which is cost of acquisition is cost of acquisition of the what asset? Original asset. Period of holding should be reckoned from the original asset. And benefit of indexation depends upon the new asset. Because the new asset may be shares or debentures. If shares, you can take benefit of indexation if you transfer before amendment date. But debenture proviso 4 is saying that for bonds and debenture, there is no benefit of indexation except capital index bond and sovereign gold bond. Are you remembering? That's why I've written as depend on the new asset. Because if the new asset is bond or debenture, you are not entitled for benefit of indexation. Comfortable? That's it, man. Now, sir, I really purchase preference shares of a company, sir. But that preference shares has been converted into equity shares, sir. This will not be regarded as any transfer by way of conversion of preference shares into equity share of that company will not be regarded as transfer. So what is the original asset you have subscribed? Preference shares. But it has been converted into will not be regarded as transfer. Now in your hand, equity shares are there. At that time, no IFOS because of proviso 56 subsection 2 clause 10. Can I proceed? But in future, when you are selling equity share, dash gain attracted. Cost of acquisition is cost of the preference share. Period of holding should be reckoned from the period of holding of the preference share. Benefit of indexation should be from the year of acquisition of the preference share. All should be going back. Are you all really with me? Sir, the last one. 47 clause 16. What mortgage scheme? For example, if there is an individual senior citizen, if they are having any residential house property and that residential house property has been given for mortgage, my dear lovable students, and bank has given loan or monthly installment to this senior citizen, sir, that will not be regarded as transfer. That will not be regarded as. So any transfer of capital asset in a transaction of reverse mortgage under a scheme made and notified by central government will not be regarded as transfer in the hands of individual senior. This loan amount, monthly amount received by the senior citizen will not be treated as income as per section 1043. Are you all really with me? That means that income will not be taxable under IFOS, my dear lovable students. These are the various clauses under 47. Transaction not regarded as transfer. If these transactions are not regarded as transfer, no need to pay dash gain at all. Are you all really with me?